Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I think will possibly be a little bit of a short one. I just kind of wanted to recap the week we've had this week because it's been quite a significant week. I'm going to start out with a couple of pieces of news. First of all, Samsung's Bitcoin ETF is now officially trading in Hong Kong. So no coincidences, right? No coincidences that right at the end of the bear market, the institutions can move in and get exposure to Bitcoin. Over in El Salvador, they have, of course, been the pioneer in adopting the Bitcoin standard. And this is exactly why, okay? This is why they've adopted Bitcoin. El Salvador's new Bitcoin wallets could cost Western Union $400 million a year. This also gives them a chance at being self-sovereign. It means they can pay off existing debts to places like the IMF. It means they are not backed into a corner where they're forced to take on debt that the IMF will happily give them, but knowing they can't pay it back. Of course, these sorts of entities do this to nations like El Salvador to ensure they always have control, okay? It's like a mafia technique. Bitcoin is not just hope and freedom for the individual, but it also for the nation. It also gives these small nations a chance at their own self-sovereignty. Yesterday, we had the US CPI data come out. I've already covered this, so I'm not going to spend too much time on it. The key take home here is inflation seems to be cooling off, and inflation year over year is likely going to be negative by the end of the year, as you can see here. So the black would be the M2 supply growth, which has fallen off a cliff. Headline inflation tends to lag a bit, but no doubt it is going to continue on this path until they start to spool these printers back up. Inflation tends to fall faster than it rises. It is quick to rise, but it's even quicker to fall. So we've seen it spike very quickly, and it's reasonable to expect that it is going to fall even faster. So with inflation coming off, is it likely that we could start to see the markets, which are of course forward-looking, price this in? Are the markets going to resolve higher over the coming weeks? Great point from Jordan here. He says, I want to see the real inflation numbers. Now, of course, we all use this CPI metric, but I think in the real world, everyone understands that inflation is significantly above their CPI number of 6.5%. Food inflation is at least 10%. Electricity inflation, 14%. Natural gas, just under 20%, okay? This meme summarizes it perfectly. Real inflation looks something like this whilst they report the CPI metric. So with Bitcoin trading back above 18K, I think it even touched 19K yesterday. Where are we now? I want to ask you this. Where do you think we are in this chart? I would argue we're likely in depression and moving into disbelief. Some very nicely timed tweets here from Income Shark. Okay, right at the top here, he says, when you've got 90% of the Twitter influencers saying up only and targets of 100K, he can see why new people worry so much. And of course the inverse is true. Near the bottoms, the majority are calling for 10K or lower. They won't even buy there if it happens because the targets will just continuously shift lower and lower. People that are scared to buy at these levels will be terrified lower down. What's incredibly important to pay attention to with the technicals, Bitcoin has undergone a very important daily breakout. 15,600 looks a lot more convincing as the bottom now. Of course this can reverse at any time, but this does not speak to continuation lower. This actually speaks to a trend reversal. However, Capo, he's not buying it, okay? He says, good morning, no changes. He is still calling for 11 to 12K. If you've been watching this channel for a while, you'll know I have been cautioning against this. I've been cautioning against sitting on the sidelines and picking a number, 11, 12, 14, whatever the number was. I had been saying over and over again, I think that trade is crowded, and I think it's even more likely now that this continues to be a crowded trade. It does not omit the possibility of a lower number. When we made this low back in June, I said I thought that was likely the bear market low. It held for a while, and then of course it was taken out during the FTX collapse. Since then we have recovered this low and are, in my opinion, about to press on higher. Remember, when we were in the last bear market, everyone was calling in this 3K neighborhood for 1 to 1.5K, and this lockout move unfolded in just a couple of weeks, completely preventing anyone from getting in near the bottom. This, to me, has a very familiar feeling to back here. So the S&P is at critical juncture. I'll show you the charts in a minute. If these local lows hold though, the bears are soon going to become forced bulls. So what do I mean by this? Well, of course, if we don't take out these lows, and it would at least come down to test the prior ones, where is your bearish narrative? This will form a massive inverse head and shoulders or a bottom in structure, which will resolve higher. Now we'll get to the charts in just a moment. Right before we do, I wanted to point out one more thing. Okay, small traders continue to pile into betting on the downside for the market despite breakouts. Max pain is towards the upside in the short term, and this is something that has also been a repeated rhetoric on this channel. What do you think the likelihood is that with maximum bearishness, with maximum retail shorts and puts, with the highest levels of hedging and short exposure we have ever seen in retail, what do you think the odds are that they're all going to be right? Retail buys the top and sells the bottom. They do not short the last portion of the crash to new lows. Again, it doesn't mean it couldn't happen, But if you're bearish right now, I think it's time to pay attention to the charts. I think it's time to start questioning your narrative. Let's get straight into the S&P 500. I've been lining this long up for a while. I said if we break out of this blue line, which we haven't done yet, then it will be time to go long. Here we are, right into resistance. It does not mean by any stretch of the imagination that we could not do something like this. Pretty poorly drawn, but you get the idea, okay? It does not mean we couldn't drop down into a cycle low and go. That cycle low could form all the way down here, equal or higher up, okay? Nobody knows. But my point is, I am neutral, okay? I'm waiting for a breakout. If we have a breakout, I have to respect the breakout. You have to respect the breakout. You know, this sort of thing does not occur during bearish cases, during bearish scenarios. So you have to be willing to pivot. Just like right now, my bias is to the long side. But if we get rejected here and roll over, I will not be longing here. I'm not jumping in early. I am waiting for the chart to tell me what to do. The Nasdaq continues to hang out and trade in no man's land. Again, this could go either way. We could get rejected and roll over. Or if this thing is going to break out and go, then again, I have to respect what the charts are telling me. Over in the Dow Jones, things continue to look even more constructive than they had previously. You can see here, massive breakout retest consolidation, which I actually expected to break lower. However, it didn't. So once it didn't, again, where does the bearish narrative come from? This continues to resolve higher. Does not mean it couldn't double top here and roll over. But for now, long and strong, continue to push. The VIX here, as you can see, stopped out. This was, of course, a hedge. This was an insurance policy in case the markets tank lower, which they haven't. That's absolutely fine. Remember, you don't insure your car and then hope you crash so you can claim on the insurance. The UK 100, the FTSE 100, continues to tear higher at new 52-week highs. To me, this does not speak to bear market rally. I don't know what the argument would be for a bear market rally in this scenario. How can you call this a bear market rally when we're at new highs? I also have been talking about a touch of this blue trend line. For now, we've closed below it and it looked to be back tested. Now, I did say over and over again, I don't expect this to hot knife straight through here. I don't expect that. But you can't rule that out. It's a market. Anything can happen. So significant developments in the equity markets, significant developments from the dollar. I do expect this to either chop around and break down or to first get some kind of counter trend bounce and then break down. But of course, we cannot rule out that this thing is just going to continue to collapse down into the 90s. US 10-year yields, the chart of truth, they're telling us something else. Remember, lose these lows and risk is going to come on very, very strongly. The same is true of the 2-year yield as well. Look, we've even lost all of these levels now. We're starting to come down and take out and set new lows for the 2-year yield. This does not believe the Fed is going to continue to hike rates. Of course, the dollar's demise is fueling upside movements in the gold market at the moment. This continues to look ridiculously strong, continues to be part of this lockout move. Not much opportunity to get in here. Silver continues to consolidate inside this box, so you know the plan. If hopefully, I would like to see this happen and then a breakout and we can buy that breakout there. Okay, failing that, if it's going to continue to chop around and then break out from the top of the box, that's where the long will come from. For now, though, happy to sit on the sidelines and see what happens. Still holding minor positions, both senior miners and, of course, the junior miners as well. So as gold continues to do this sort of thing, I would expect the miners to catch up pretty soon. Bitcoin, we're long, we're strong, we continue to push. We are now knocking on the door of 19K. If you've been watching the channel for a while, you'll know I actually expect this to pop up quite significantly. I expect this to lock out a lot of people like Capo. Now, it doesn't mean Capo couldn't be right and we couldn't be about to do something like this, okay? Doesn't mean that. But given where we are in the cycle, we have just started a new cycle. We should have at least 40 days ahead of us of upside. Remember, markets always move to hurt the most amount of participants. And the most amount of hurt that could be caused in this market right now is a massive, massive, massive upside rally, forcing all the people that are sidelined or have sold or shorted down here, thinking they're going to get 10, 12, 14K. They're going to have to cry whilst they look at a $20,000+ Bitcoin price, which happened seemingly out of nowhere. So as per the prior videos, as per yesterday's videos, I have seen enough follow through from Ethereum to go long. I'm officially long Ethereum. This is what the position looks like. XRP seems to be working its way up to this 40 cents range, so I'm not really interested in this no man's land area, but get back above 40 cents, and I think that will be a long from me. MATIC starting to do a bit better, starting to creep up back to a little bit of profit now, so pretty much sideways still, nothing to be excited about, but long and strong continue to push. Zcash looks like it wants higher. It needs to really now break out above this. If you're not in already, that is a trade idea. You could buy the breakout above that, just like I did with the breakout above this back here on the 25th of November-ish, or maybe a couple of days before that. Encouraging look from Geo. I want to see this follow through now. I want to get some chop from this and start to break out, and then you know the score. We can add to Geo on a breakout of this box. The stop loss has already been moved up to here anyway. ARK back inside this box again. I want to see it trade around, chop around, and then break out, and that could be a long from me. If it can do that, I think plenty of upside target for ARKK. Given the Bitcoin pump that we've had, Coinbase starting to perform, little bit of open profit on this, so happy days. It's been a while, it's been underwater for a while, and the same is true of MicroStrategy. As you can see, tiny bit of profit here, nothing to be excited about, but it's nice to see some green since this position was such a bad entry to start with and had to be averaged down. Whilst I'm here, actually, that's a very good point I want to make. Losers average losers. Average up into winners, do not average down into losers. I know I have averaged down on these two positions, but I was saying as I was doing that live on the channel, this is not something you want to make a habit of. Losers average losers. The only reason I felt comfortable doing that is because I'm such a permabull on Bitcoin. I'm such a firm believer that Bitcoin was going to come out of its cycle low around this time of the year. So far that seems to be the case, but please do not make a habit of averaging down into losers. Just cut your losses and wait for a re-entry on a trend line break. In fact, I was kind of kicking myself here because whilst I entered somewhere up here and then had to average down multiple times in order to get this average down here, if I had just cut the trade on this big red candle or perhaps down here, I could have easily waited to buy a breakout back above this trend line here, and that would have been a far superior strategy. I wouldn't have been underwater. I wouldn't have been losing money to opportunity cost. I wouldn't have had money tied up in this losing position, having to average down, having to risk taking even bigger losses the first time. This is not something you should do. This is not something you should get into the habit of. What you should do, and what I should have done on these two assets, Coinbase and MicroStrategy, is I should have cut this loss sooner and then look to re-enter on a breakout. Riot blockchain also breaking out. You can see now we've not only broken out of the first bit, but we've also broken out of the second bit, retested and look to be resuming higher. So I expect this to continue. I expect this to get pretty bullish pretty quickly given the pump in Bitcoin, so long as that can continue. Marathon as well, absolutely massive gains, 30% yesterday. Again, not much we can do here apart from remain long, remain strong and continue to push and hope that Bitcoin can continue to follow through. There's a trade idea for Apple. I'll just put this out here. So not currently long, but if we can break out of here, then you can have a trade something like this, assuming the stocks are going to continue to be bullish. The same is pretty much true of Tesla. If we could break above this level here, then there's quite a high risk, high reward trade for Tesla. So it would look something like this. So just an idea. Lastly, before we say goodbye, I just wanted to point out that if we go to this melt up chart, remember all you have to do is draw a line here and connect these. Okay, that's all you have to do. We are very, very close to breaking out of this. You could perhaps even be stricter and say we're right into resistance now. So it's Friday. I'm not looking to take on any extra weekend risk. I'll be holding all of my open trades through the weekend and I'm comfortable doing that, but I'm not looking to long the S&P into Friday. I will be paying very close attention to this for Monday, looking perhaps for a breakout retest resumption, and then we could go. But remember, if you're bearish, okay, you really, really, really need to see rejection here, followed by taking out these lows ASAP. Because if you're a bear, that is your last line in the sand. We do not roll over here and take out those lows. In fact, we break out here and go. Then we are right on track for the melt up. We are right on track to absolutely scorch all the shorts, all the bears. And that's fine. If you were wrong about bearishness, that's fine. If I am wrong about this melt up, that's also fine. As an investor, as a trader, you get things wrong all the time. What's important is not being right or wrong. What's important is being able to pivot your positioning to profit from the markets. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. Turn the notifications on if you want to continue to get updates as I open and close my positions. If I get stopped out, I will show you all the mistakes. I will try my best to uphold the highest possible standard of a real world pro swing trader on YouTube. This will always be free. There will be no paid subscription services, no Discords, no Telegram groups. I just give this information out for free because I absolutely love doing it. Enjoy your weekend. I wish you all the best in life. And until tomorrow, take care from me. Cheers. Bye.